Yeah, we're actually calling for a down 16% globally for auto production in 2020. And the way we arrived at that is we looked at what happened with China and we extrapolated that to North America and Europe. And really what we're finding out is it's akin to what happened in 2009, to be quite frankly, in 2020. And that's going to mean significant cuts to numbers, which we did yesterday, significant cuts to price targets. But the point I want to make today is even with those reductions, the drop in the share price for VW still implies, we think, upside. We view this as more like a kind of a 9/11 type event as opposed to a 2009 type event. We think there is potentially some light at the end of the tunnel.
If you look across the automakers, by and large, the valuations have looked very cheap for a very long time. But there have been good reasons for that. Coronavirus clearly is the current problem, but longer term issues around the viability of the ICE engine and how quickly these businesses are adapting at this stage. Why would anybody put capital at risk in this sector right now when there are other places that you could park it that look more defensive and potentially have better growth options?
Yeah, and I think this industry is really a winners and losers type industry. So VW, as we were talking about earlier, is actually really aggressively going full electric, as opposed to some of the other peers. So they're actually uniquely positioned in this environment. Weirdly, the Dieselgate issue may have actually been a benefactor for VW. They're aggressively going electric. Now, all that said, there's been some commentary from investors of late in recent events that potentially the CO2 regulations coming in 2020 may get pushed away, may get pushed off a little. But when you talk to the companies, we're not getting indication of that just yet. But
Tom,
certainly,
this is a good point about long-term ramifications, isn't it? Because we saw back around 2008, coming up to that crisis, everybody cared about the environment and simply disappeared for about 10 years.
Absolutely.
Some people still cared, but the large population that were recycling and calling for more green measures didn't care anymore because they were looking at their own pocketbooks. Could we see an element of that this time round? You've had an oil price that has crashed, much lower now to put petrol in the tank. You've got people now genuinely looking at their household finances and their businesses might care a little bit less about whether they're buying new Tesla or something else coming off the production plant from Volkswagen and Mercedes.
Absolutely. That was my contention. It's interesting. I've asked the companies this, and they've been reluctant to say so, probably waiting on a response from the governments to say something like this. But you're absolutely right. I can't see anything other than what's happening now, shutdowns of overall countries, and anything else that could cut emissions more than this. Right? So potentially this could push those regulations to next year. And that's important. Battery prices are coming down. It could also allow consumers to get more familiarized with EVs, charging their cars at home, which we think is a big catalyst. We're a big proponent of EVs. And we actually think at the end of the day, if you can push out the regs to next year, there may be a weird silver lining to all this.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.